Looking at the earnings being maintained, cash generated by operations up 63% as well, and affording some cushion has been your conservative strategy of locking in long-term supply agreements. The concern, though, comes moving forward. With the uptick, one would assume that there's some downside to that strategy where you wouldn't benefit entirely from the increase in local demand, export demand and rising prices as well.
Yeah, I think we must go back to the global financial crisis, and a lot of our peer group suffered dramatically in that period, whereas we maintained our earnings in that period. So I think, in a way, we've smoothed out our earnings profile over a longer period of time. So we've taken some of the volatility out of a commodity, and if you look at anthracite, it's a commodity which is not clearly understood in the marketplace. So and often we ask the question, well, guys, where's the earnings coming from? What's the profile? So in a way, what you want to do is lock in some longer term supply with good pricing at the time where people and analysts could look at it and say, guys, okay, I see where the revenue's coming from. It's a new business, a new company. That was originally a strategy. And then, coming through a very difficult time, we did outperform our peer group dramatically in that period, and we've maintained those earnings going forward. Going forward, you must understand that not all of these contracts are locked in for long term. We have an additional big expansion at Somkhele, which is going to yield double our production. Those sales are uncommitted at this stage. So obviously we have great potential in realizing any increase in prices or any increase in demand in that regard. The anthracite market in itself is quite interesting at the moment. There is supply constraint. There is intensity in the increase of use of anthracite as a reductant. So there are a bunch of things that are stacking up in our favor. For the balance of this year, pretty smooth, but we're looking forward to 2012.
Francois, your view on these numbers, and also, as Bradley's been talking about, the smoother earnings profile, but missing out really to the upside when we see these spikes in coal prices.
Yeah, Stephen, I think the main issue here is the cash generation, and also it's got a very strong balance sheet. Did a quick calculation, about 15% of the 1.8 billion rand market cap is cash. And the company's mine, Somkhele, is about 85 kilometers away from Richards Bay. So my question to Bradley would be, how much of your production do you export and how much goes into the local market?
What we did is, we traditionally had a 50-50 split. Well, obviously, there's a lot of increase in the use of anthracite in the ferrochrome industry. Strata's announced a big expansion recently, so we feed into those markets. We've weighted the sales a little bit more to the local market, given the fact that we've had a much stronger rand in recent times. But on average, we would probably export this year between 200 and 250,000 tons through Richards Bay. We have our own dedicated facility there. But when the second plant is up and running, we would consider to move that up to above 450 to 500.
You touched on that second plant up and running. Of course, the plan was to double the size of Somkhele over the next 12 to 18 months. At your last results announcement, 6 months closer to that deadline. What kind of progress are you making on that?
We're very happy with progress. We're on track. All the long lead items have been purchased, ordered. When we initially built the first plant, we actually spent a lot of money on the civil, so we invested a lot of the initial capital already for this expansion. So we think we're pretty much commissioned in the first quarter of 2012, and ready to go from there.
Any infrastructure constraints to this ramped up production and getting it to Richards Bay? Although Francois did point out you're pretty close to the terminal.
Very fortunate in that we don't have access to rail. We simply truck our material from Somkhele directly to the dry bulk terminal, which is, in a way, quite a big competitive advantage. On the backhaul of all the ferrochrome producers, because they take their material to the dry bulk terminal, they tend to pick up our material on the way back up to Leidenburg and places like that. So it's nicely positioned from a logistics perspective.
Operating in South Africa, are you feeling any constraints in the country right now?
Look, we have challenges logistically in South Africa. I think that is a fact. But I think we've managed our business around those challenges, and I think that's, doing business in any part of the world, you get given a set of circumstances, and you must manage them to the best of your ability, and I think we've managed that quite well to date.
Of course, there's been a lot of murmuring around, the certainty around mining rights. Do you have now all of your prospecting rights in place?
Yes, we have a very active relationship with the DME, and one of my colleagues deals with all levels of the DME and DMR, and we believe that there's nothing better than day-to-day conversations, day-to-day interaction. We've got all our mining rights in place. Our title is very secure.
Francois, an anthracite miner as opposed to a coal miner, what would the spark be for you?
Anthracite is, I think, very attractive because it's very closely involved in the production of steel, and it's also quite scarce, especially the demand for anthracite in China is quite high. And on the coking coal side, I mean, I think Bradley might help me out on this one. It's a high, anthracite is a much more highly valued commodity compared to normal coking coal.
I mean, I think what's happened in the world is that hard coking coal is a scarce resource. And I mean, obviously, the production of coke is predicated on hard coking coal and the prices of hard coking coal. Most of the reductant of choice in most of these businesses is actually coke. And what has happened is that over time, a bunch of the ferrochrome producers in particular have looked at anthracite as a replacement for coke. And I think we've moved a long way over the last 6 to 7 years in that regard. And I mean, the demand in South Africa, and the local demand, has increased dramatically over the last 5 years for the use of anthracite in that particular instance.
But to emphasize at the same time, Bradley, is that you've got a commodity and geographic diversification plan that's on track as well, that's leading you into a wider commodity fray.
Yeah. Look, I mean, we've been talking about our business of tomorrow for some time, and we've done an enormous amount of work. I mean, the wonderful thing is that we've looked at least 100 different projects around the world, you know, and I mean, everyone's got $1 billion project and $100 million mine, you know the story. So we've been very careful, we're very rigorous in our approach. You know, we are custodians of other people's money, we take that role quite seriously, not in the least that management has a significant stake in the business as well. So we are on track with that, and as you can see from the 2 iron ore investments we've made over the last 6 months.